Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This video is going to speak about midnight opening price. Before we get into today's lesson, let's get into our disclaimer. Do your own research. My content is intended to be used for informational purposes only. Please do your own research before making any investment or trade based on the information provided, and consider your own personal circumstances. You can talk to a professional or do your own independent due diligence on verifying any information you find on my channel. This is a message from myself, Deontay, as I am not a professional. With that being said, let's get into today's lesson. The Forex market has two conditions each trading day: discount and premium. Midnight opening price sets the stage for these two conditions. Midnight opening price starts at 12 a.m. New York Eastern Standard Time. Premium is defined as a market within an overbought condition. Price is likely to sell within a premium condition. If the daily range that is forming is bearish, selling within the premium condition is high probability. Now let's look on the left and look at examples of a premium market and when it sells within a premium market. Here we're looking at New Zealand dollar, and I have 7 trading days here. We have January 19th all the way down to January 27th. So you could go back in your charts and look at this yourself after the video or even during the video. Here we're looking at the markets moving into a premium range and then selling off. So how do we know when the markets are in a premium range? Well, let's take a look at January 19th. Here we're looking at the full trading range for January 19th. Now many people may be asking, hey Deontay, where's midnight opening price or MOP or this thing you call MOP? Well, it's right here. This candle is midnight opening price. This candle starts the trading range for January 19th. This candle is all you need to know as a trader. It is a natural price indicator. You don't need an indicator that someone coded or put together to tell you when to buy, when to sell, or when things are going to be overbought or oversold. This candle here tells you if it's overbought or oversold. Anything above this line is going to be a premium, which is overbought. The markets are more likely to sell above this line here than below it. They're always looking to try and sell at a higher price. For example, if you brought a pair of sneakers from a venue or a vendor for $10 and you wanted to sell this, would you sell those sneakers for $5 or for $20? Most people are going to say $20 because they want a profit. That's essentially how you want to think about these markets as well every day. You're going to look to sell at a higher price than a lower price because it's less risk to you as the trader. Selling at higher prices will bring greater rewards. As you can see here for the trading range, price rallied up above midnight opening price up here and then sold off for the rest of the trading range. Now let's look at another day. You can see here on January 20th, the same thing occurs here as well. Price does what? Price moves above midnight opening price because this candle starts the new trading range right here. It's a down closed candle, so we know the open is right here. Price then moves above it, moving into a overbought condition or a premium condition, and then sells off for the rest of the day. That is your natural price indicator. Moving on to the next day as well, you can see January 21st, the day was a little more sideways, bit of a holding pattern of consolidation, but you can see every time price kept coming above here, it kept coming down. Coming up, touching this line, coming down. This is a sensitive price point to the market. We know that the market opened here for the trading range for the 21st. This is the opening price here. Price kept coming down, touching it above it now, quickly rallying away. It didn't want to really be up here. When the markets are in a hurry or quickly trying to get somewhere, it is going to move into that premium condition. If it's truly bearish and it's a down closing day, it is going to move into a premium condition, and those conditions won't last for much longer. Meaning, the opportunity is only presented only a couple times during the day, maybe one time. Sometimes you're not even presented the opportunity to get into the market. You can see here, price comes up quickly, runs, comes up quickly, runs, comes up again, comes real close to it, but doesn't test it. But you can see it's getting into that premium market and not going any higher because they want to get priced somewhere. Let's move on to the next trading range. January 24th, you can see here, price opens here, price comes up. Doesn't necessarily give us a premium condition to sell in. Every day, you're not going to get that condition. Do you understand? Forex is not one-dimensional. It's multi-dimensional. Things are not going to always be cut and dry. Got to be a little flexible. Here, it does come up and gives a rally. Doesn't get above the premium line that we're looking for. Midnight opening price. Doesn't move into the premium condition. But does give signs of, okay, doesn't want to be in premium. Wants to go lower. Moving on to the next trading range. You can see here, price was in a premium. Moves down, moves up. But this is a sideways market. As you can see, it looks like consolidation. The market wasn't dramatically moving higher or dramatically moving lower. It looks like everything is range bound. All these price points in these candles are generally within the same area. Moving on to the next trading range, you can see here on the 26th as well. Price moves up above midnight opening price, real drastically here too, and then sells off. Because this is a premium or overbought condition. The markets like to sell at a higher price and capitalize at selling at higher prices than selling at lower prices. Moving on to January 27th, we can see the same thing happening again. Midnight opening price, price rallies above it, comes down again, gives another opportunity above midnight opening price. We'll draw this out a little further, and drops lower to finish the down closing day. In bearish conditions, selling above here is high probability, simply. Now let's look at a bullish condition. Discount is defined as a market within an oversold condition. Price is likely to buy within a discount condition. If the daily range that is forming is bullish, buying within the discount condition is high probability. Now let's take a look at discounted conditions. Looking at the dollar index, and we're using the same exact days that we use for New Zealand dollar to be transparent, January 19th all the way to January 27th. Here, let's look at January 19th a little closer. Now the same thing that I said with New Zealand dollar, we're going to be looking for midnight opening price, the candle that starts the new trading range, which is here. At midnight, we draw that opening price out. Anything below this opening price is a discount condition or a oversold condition. Here in this example, you can see price moved up into the premium condition and then back down to the discount condition. However, it was a down closing day, so it did move into that premium territory and sell off. But we're looking for bullish examples in where discounted markets give us explosive dynamic moves to the upside. So let's look at the next day. Here on January 20th, we got the opening price here, the start of the trading range. We can see price moves down into a discount, and it's a bullish day. Moves up, gives us another opportunity to buy down here below midnight opening price, and rallies away, giving us an up closing day. So this was a bullish day, or up close candle, or a green large candle on the daily chart. The buying opportunity came below this line here. Let's move on to the next trading day. Here, we don't get a nice opportunity for a long below midnight opening price for the trading range. Price is more moving sideways or in a holding pattern because these prices or these candles are relatively close to each other in price. So this is a sideways moving day. There are going to be days that are not tradable. Not every trading day is a trading day. Don't let that go over your head. So moving on to January 24th, we can see here, this is an up closing day. The opening price is here. Price moves below discount, below midnight opening price, which is discount, and gives us a dynamic explosive move to the upside. Moving on, we can see here as well, January 25th, price opens here, price comes down, and then rallies up real quickly, returns back to midnight opening price as well, as you can see throughout the rest of the day, and consolidates. But you can see how the buying opportunity was right here. Moving on to the next day, move this back so we're not confused. You can see price opens here for the 26th, moves down, rallies away, really explodes and takes off. That buy down here was low-hanging fruit, essentially. Or, in other words, a high probability buy because buying below midnight opening price is high probability. January 27th, we can see price does not move down into a discount condition or a oversold condition. Like I said, not every trading day is a trading day. There are going to be missed opportunities. You just have to live with that. Things will not be perfect. However, the same rules still apply. If you're going to look for a buy, the buy is most likely going to want to be in a discount, not a premium. In summary, if you are bullish, you are looking to buy in a discounted condition, not a premium condition. If you are bearish, you're looking to sell in a premium condition, not a discount condition. Now, this works on any asset class, any pair that you want to trade in Forex. Just look at it, go back in history, go on your daily chart or your hourly chart, and look to see where price was bullish and see how it probably dropped below MOP and then rallied higher. Or look for a down closing day, go onto the lower time frame, and look to see how price rallied above midnight opening price, moving into a premium, and then sold for the rest of the day. With that being said, let's conclude the video. You may be faced with many defeats in life, but never let yourself be defeated. Maya Angelou. Thank you, and hopefully you learned something new today. Peace.